Welcome back, everyone. And wow, today is a really, really tough day in the crypto market. Bitcoin is absolutely caught in a brutal sell-off, and it's being squeezed between this macroeconomic fear and a massive, massive derivatives liquidation event. The price has just shattered key support, and honestly, the entire market is on edge.
Okay, let's just dive right into this. The crypto fear and greed index has plunged down to just 22. And let me be clear, this isn't just fear, this is extreme fear. This number tells us that, yup, widespread panic has officially taken hold of the market.
So this brings us to the core question of today's analysis. What specific forces are driving this crash? And of course, the big question on everyone's mind, is Bitcoin about to break below that critical $100,000 level? We're going to break down the three most important factors right now.
First up, we have to look at the big picture. The market isn't just facing internal pressure. It's caught in what you can only describe as a perfect macroeconomic storm, with pressure coming from two totally distinct fronts.
So the market's dealing with this intense one-two punch. On one side, the ghost of the 2023 banking crisis is back. We're seeing renewed credit stress at U.S. regional banks like Western Alliance, and that's spooking investors away from risk assets. Then on the other side, the confirmation of U.S.-China trade war is just adding this huge layer of geopolitical uncertainty, directly threatening that $100,000 psychological floor for Bitcoin. And the technical damage from all this? It's severe. Bitcoin has sliced right through its 200-day simple moving average. Now, for traders, this is a major, major red flag. Losing this long-term trend line is a powerful confirmation that, for now at least, the bears are firmly in control of the short-term trend.
Okay, so that's the external pressure. Let's move to our second factor, because this isn't just about what's happening out there. There's a massive storm raging inside the crypto market itself, and it's all about derivatives. Get this, a staggering $5.72 billion with a B worth of Bitcoin and Ethereum options contracts expired today. An event of this magnitude is pretty much guaranteed to create extreme volatility, as these huge players are forced to adjust their positions. It really just set the stage for chaos.
And boom, here's the immediate, brutal result. A whopping $800 million in long positions were liquidated, just totally wiped out. This triggered what traders call a liquidation cascade, where forced selling triggers more price drops, which in turn triggers even more forced selling. It is a vicious downward spiral. Okay, I know. The short-term picture is bleak. But let's pivot for a second. Because if you zoom out, the signals become much more mixed. Not everything is flashing red. And the long-term story is actually way more nuanced. Now, the pain is definitely not spread evenly. Ethereum is actually down more than Bitcoin, falling about 8.6%. And the smaller cap altcoins, they're getting hit the absolute hardest, with major projects like Sui, Avalanche, and Chainlink all bleeding over 10%. This is a classic flight to safety, even within crypto itself. But even amidst the chaos, capital is finding refuge. The XRP ecosystem is a clear outlier here, boosted by Ripple's billion-dollar acquisition of G-Treasury to push into corporate finance. And notice the stablecoin market cap, it's holding firm. This tells us that money isn't just leaving crypto. A lot of it is just moving to the sidelines, waiting for an opportunity. And the crucial point here is that the fundamental long-term drivers, they haven't changed. The Genius Act, which is a bill that aims to create clear rules for stablecoins, is still progressing. This could pave the way for stablecoins to become a global payments backbone. And at the same time, institutions are pushing deeper into the space with new filings for products like staked Ethereum ETFs. The institutionalization trend is very, very much alive. So with all this conflicting data, short-term panic versus long-term optimism, how should you even navigate this market? Let's shift to a framework for strategy, looking at the key data points you need to be watching right now. Here are three critical dashboards for market health. We've already talked about the fear and greed index sitting at 22. Spot ETF flows are showing significant outflows, which we'll look at in a second. And BTC dominance is high at over 59%, which just confirms investors are dumping altcoins for the relative safety of Bitcoin. This chart right here is incredibly telling. We've seen a net outflow of nearly $588 million from the spot Bitcoin ETFs in just the last day. This is a crystal clear signal that institutional players, the big money, are actively de-risking and reducing their exposure for the time being. We absolutely need to see this flip back to inflows for a sustained recovery. So what does this mean for your strategy? In this environment, it's all about being hard-headed. First, reduce or just eliminate leverage. We just saw $800 million get wiped out.
Second, maintain liquidity by holding stablecoins. This gives you the power to act if we see a deeper dip. And third, focus on quality, BTC, ETH, and projects with real, strong institutional narratives.
Okay, the next 24 hours are going to be critical. Keep your eyes peeled for three things tomorrow, October 18th. Any updates on the U.S. regional banking situation, any commentary at all from the Fed on the economy, and any news on the progress of that genius stablecoin bill. Any one of these could move the market in a big way. So, to summarize the most likely short-term scenario, it's this. All eyes are on the $100,000 level. The market is poised to test this massive psychological and technical support zone in the next 24 to 48 hours. How Bitcoin reacts right here will likely set the tone for the coming weeks. Which leaves us with the ultimate question for every single investor right now. Is this extreme fear the final capitulation event that long-term investors have been waiting for? Or is it a warning sign of a much deeper sell-off to come? What are you doing with your portfolio? Let me know your thoughts in the comments below. We'll see you in the next update.